G'day everyone, welcome to this weekend general update for the 3rd of February. And markets continued to march on. We had another strong night on Friday night in the US, continuing the uptrend, and our market obviously had done very well also. I guess an observation in general, when everybody thinks that something's going to happen, it almost certainly never does, or it never happens in that fashion. And we seem to have consensus at the moment that after something like 10 weeks that the Australian market has gone up almost in a straight line, that we're due for a correction. And that is absolutely true, but it won't happen when everyone is expecting it. So I wouldn't be surprised to see something different happen. Our market maybe continue a little bit further. We could go up above 5,000 points. And I think it'll take an event where a lot of other people start to come into the market, a lot of latecomers start coming into the market. When the press really starts talking about how good the trend is, that's when the correction will come. So whilst I'm cautious, because we are so heavily overbought on markets all around the world, I just have this feeling that we're not going to see it maybe in the next week or so, that it might just catch us by surprise a little bit later. But nevertheless, any correction I think is going to be short-lived, and it's going to be merely to work off the excess. So I continue to be very, very firmly of the view that 2013 is going to be an absolute ripper year, and it really just takes some clear thinking and some discipline to really make a lot of money in this year. So let's have a look at the action for the last week. Just a reminder about the general advice nature of all of this information. So the S&P ended up rising 10 points on the week. It paused for a couple of days, as we'll see when we look at the chart, but really didn't retrace. The intraday moves were fairly small, and that's really a sign of great momentum, and then it was off again on Friday night. So very, very positive signs. And the other positives too are that the Russell 2000, the small and mid-cap index, remains extremely strong. It's probably the strongest sector of the market, and that's always a good sign. The Nasdaq is also strong, so they tend to lead the market higher, and there's no signs at this stage of those indices weakening off. Now our market had another cracker week. It was up 86 points, and that was on a 4-day week. So that came on the back of 60 odd points the week before, and I think another 60 points the week before that. So it's been a very, very strong surge. And if anything, it's accelerating. And I think with reporting season coming up, I think it's only a week away, a lot of the banks and BHP and Rio and a few other resource majors are really being bid up on the expectation that their reporting results are going to be better than previously thought. So, look, certainly things looking really, really good in Australia, but a lot of stocks are stretched, so just be careful, because we are even more overbought in the short term than we were last week or the week before. Now the US dollar was down sharply on the week, and obviously that's positive for stocks. And the Aussie dollar took a little bit of a hit when the Chinese PMI data, Purchasing Managers Index data, came out. And unusually the official data is normally more rosy. The government data is normally more rosy than the HSBC commercial data, but this time it was the other way around. HSBC's number was very bullish. The Chinese official government data came in a little bit more conservatively. So the Aussie dollar did take a bit of a dip, but it recovered again and is back above 104. Now gold rose $8 on the week, still stuck in the trading range that it's been in now for quite some time. But look, the fundamentals are still very, very compelling. It's just taking longer than we would have thought. I would have expected this to have resolved itself and turned to the upside probably 6 months ago. But in the overall context of things, it doesn't change anything, and the fundamentals for gold well above $2,000 an ounce are still extremely compelling. Copper continues to rise very strongly. We're now back up to $3.75. We're not that far away from all-time highs. So the people that are telling us that the global economy is still in trouble, they're just not looking in the right places. the copper price at $3.75 is a pretty good indication of what's actually happening on the ground. And the oil price also continued to firm up, and we're back almost to $100 a barrel. So let's have a look at the charts, and we'll start with the S&P 500 index. And you can see that we had a big reversal on November 16 when basically all world markets turned up. We then had a bit of a pullback of about a week or so when all that fiscal cliff rubbish was going on in the US around Christmas New Year time, and then since then the market hasn't looked back, and it took off and it's gone up in a straight line. We had a 2-day pause on Wednesday and Thursday of last week, but that was around about the 1500 mark, which was to be expected, but it just took off again on Friday. So looking at where the resistance might be, we've got some resistance coming up around 1520, and above that is the all-time highs at about 1570. Now you can see the RSI is quite overbought, so we will get a correction, and I would expect that the correction may look something like this one that we saw from around about the 18th of December to the 30th of December, where the index dropped about 30 or 40 points. So I'm not really expecting anything too much, probably of the order of 5%, 10% at the absolute most. But providing you play your cards right, that will just set up some really, really good trading and investing opportunities. So not something to be feared. Correction is something to be embraced, because at the moment we're really starved for good opportunities, because so many stocks have moved ahead pretty strongly. Now, just looking at the Russell 2000 stock index, you can see it's also had a very powerful run. It's moved from around 760 to over 900 points in a very short space of time, and is basically at new all-time highs on that index. So a lot of strength there. This is the Nasdaq. Also, you can see it's been a very strong move from under 2400. We're now up getting close to 2800 points, but again, all these indices are all overbought. The Chinese index continues its incredibly strong rebound, turned around on the 4th of December, and it's gone up almost in a straight line from around 1960 to about 2420. So powerful move there. Let's have a look at the London market, and you can see also it's had a very strong run as well. It's not up to its all-time highs at around 6,800, but it's not that far away. It's about 6,350 at the moment. So despite the fact that the UK economy is probably in recession, the stock market is still looking well and truly ahead and looking extremely positive. Our market, our index, as you can see, we turned on the 16th of December, the 16th of November, pardon me, and you can see we've been overbought now for quite some time. We first reached overbought status around about mid-December, and it's continued to rise. It's gone up another 300 points since reaching overbought. It's quite stretched to the upside, but this trend is so powerful there's no reason why it can't continue, and I really think it probably will keep going now. It'll get over 5,000. I think that will probably bring a lot of media reports about how good the stock market is going, and once we see that, then that is the time to definitely, if you're a shorter term trader, I'd be selling everything, because you know that the correction is going to be pretty close once the media jumps on board. Let's just have a look at a relative comparison chart of the Australian indices, and there's really been no change here for quite a lengthy period of time. Healthcare, clearly the outperformer and continues to hold its lead. Telecoms also strong. Banks, if anything, catching up a little bit to those two sectors just in the last week or so. And also we've got the small caps, and then the two red ones at the bottom, which is energy and materials, also rising. but not really making any ground on those other indices at this stage. Now let's turn to gold. This is gold chart on a daily basis. We gained a little bit of ground on Friday, a few dollars, but as you can see, it's really been in just a sideways range now since about the 20th of December. And if we look at this on a weekly chart, it's even clearer the trading range that we're in. We're getting to the pointy end of a fairly distinct wedge, and it's pretty hard to believe that the breakout of this, which will occur, the breakout is going to be to the downside. It's remotely possible, but one would think that the breakout has got to be to the upside. So I think we'll get resolution of this fairly soon. This is silver, also starting to move back up again, but the moves in the precious metals haven't been totally convincing yet. There's still obviously some forces out there that are holding those particular metals prices down, but they will get there in the end, I'm sure. Let's have a look at a couple of the relevant indices. This is the GDX index of global gold stocks, and it's just looking to me like it's starting to form a base here. Maybe it's a bit of wishful thinking on my part, but we certainly are oversold, and we've had now 5 or 6 sessions forming a bit of a base, so this would be a pretty good point for it to go up from. And the other main index that I track is the Huey Gold Bugs Index, and it had a sharp fall about 6 or 7 trading sessions ago. It's oversold, and it's also starting to look like it might start to head up as well. We're just seeing a bit of resilience come into the Australian gold producers now, so the signs are certainly improving. And just the final slide, this is the copper chart, the 6-month spot copper chart. You can see we're in a range between 350 and 370 from about November, but we've broken out of that now, and we're heading back up to challenge the highs at $3.80. So it's all looking pretty positive. Certainly Monday looks like being a good start, and let's just see how we go from there. So that's it for this week. Cheers.